Good morning, guys. Welcome to this Tuesday, March 18th, and we got the FM FOMC. As that thought I did that backwards. FOMC meeting begins today. The Fed meeting. We have a little bit of news coming up. At 8:30, we get housing starts and permits. We get import export prices, industrial production at 9:15. 20-year bond auction at 1. So a little bit of news to contend with this morning, 8:30, 9:15, and a 20-year auction. Fed meeting begins, and today is going to be an interesting day. Are we going to hold on a little bit on these moves, or are we going to get some kind of a directional move here ahead of the Fed meeting? I think the consensus is that they're not going to really change anything on the rates. But we're up here against that. We have reverse retesting that 57, 30 to 40 area. We were up here, pretty good spot yesterday. They couldn't hold it. So at the late in the session, they knocked down this whole area we were looking at in the last update yesterday. Like if they held this area, we were in really good spot to start from the long side, but they couldn't. They ran right back down here into this lower area. So we're starting off range bound with this. I would still give a slight bias to the upside. They haven't fallen totally apart in the overnight. They just kind of backed off a little bit from that little rally we had going into the close, and so far we are pretty much going holding right below this area of resistance. So if they can get up above that, especially get up and hold above this area of now it's still resistance because they ran out, they probed it, couldn't hold it, they're back below it again. So I would say that this is still very much resistance. If they can get up above this upper area towards the 57.65 attractor and hold there, I mean, we may be making a dent in this, but at this point, this is still very much an option for a short setup. So you're looking at the bigger picture, capital flow. So yeah, they cut off the selling here at the 55, 10 to 12. Now we retraced, and so far we retraced all the way back up here to the 57.40s. Pretty good retracement at that. So chances are, if resistance hold now at 57.40, we're going to back down here into that somewhere here in that lower range and start building value. Maybe not testing the lows again, but definitely started finding a spot to start building value. So we'll see if this is a repricing, or I mean, I'm not expecting a V-shaped recovery because I mean the market that may have repriced itself based on future tariffs and whatnot. So I think it's still very much overdone, though. It's given what's going on, it's a lot more panic than anything else. I saw somewhere that this is one of the third fastest retracement ever, or something like that. It's been pretty fast on the downside. So it feels very much overdone, and I mean, the companies are still putting out great earnings and so on and so forth. And nothing has really changed fundamentally when it comes to company earnings and so on and so forth. What's changing is the tariff pictures and trade picture and stuff like that. And I'm not sure. I think that's a huge negative, not for this economy at least. So other economies which are really exporting a ton in here, which may be facing more hurdles, but if you have alternative goods you can purchase within the US, you may not have to buy foreign goods which is tariffed. So it may not be that big of an effect for the US economy, this tariff situation. So we'll find out how crazy that is. But I think this is very well overdone this sell-off, and I'm expecting some sort of a retracement, maybe not up to new highs, but definitely a little bit higher than we are right now. So starting off range bound, still thinking about potential long opportunity, but I'm going to start off range bound and see where they're going to go from here. I'm looking for a retest of these highs, the 35s, 45s, and the 55s. And we're still looking for a potential short here for rotations right back down again. So if we get a nice retest set up at 35s, 45s, maybe the 55s, and the failure, that could take us right back down into this lower range again. And that's in the bigger picture. That's just a reverse retest failure of resistance up here. And it's a slower process. It's not like a intraday type of a trade. It's then back up here, they're holding, that I'm going to retest it, and then we may see them back off. If they do not, if they start taking out this 35s, 45s, start trading up in the 55, 60 area here and holding, I'm going to be a little bit more optimistic on the long side. But at this point, starting off range bound, going to look for early strength for potential short opportunity against that 57, 35s, 45s up to the 55s for rotations back down. And if we don't get much strength to lean against, I would, and yes, start getting weakness. If they start taking out that 5700, the 56.90, it's 56.95. If they start taking out that support area, I would start thinking, okay, maybe they're going to retrace it right back down again. So not going to be super aggressive on the long side. But if we get a little bit of weakness, I'm going to be looking to buy against the 57.05, 56.95s for rotations back up again. All with a little bit of caution, just in case they're going to kind of try to knock this even lower. And this one should be back here. I can pull this guy back together, like so. All right, so there we have that guy. Back to my F1 on capital flow. All right, so that's the ES. We are right up here against resistance. And if this is going to hold, if that resistance area hold, we may see this develop into one of those reverse retests, which is could set up a nice short trade for rotation right back here towards that 5600 level. I'm not sure. I don't think we are in a sell-off mode just yet. I think that shock of tariffs and tariffs here, tariffs there, going to do this, do that. It's kind of market is getting its bearings, I guess. Yeah, okay, tariffs. You don't have to be scared about it. So, and I think when the reciprocal tariffs comes in, I think I kind of personally like that idea. That seems to be pretty logical, you know. And the idea is really to lower the tariffs across the board. So if everyone has to pay like if 50% tariffs back and forth, why not just drop the tariffs altogether and drop the total price? I mean, that would be the reasoning, right? So we'll see if that happens or not. But you know, that's what the reciprocal tariffs potentially could create. So we'll find out if it works out that way. I think the outcome is great, and I would be a lot more positive about the economy. If not, if everyone's going to hold the high tariffs, I think we may be struggling for a little bit longer. So starting off range bound, looking for early strength to retest these upper areas of resistance at the 35s, 45s, 55s. And I'm looking for short setups here for rotations back down again. See if that reverse retest is going to hold. That's what a default trade looks like. And if we get early weakness, I'm looking to buy against the 57.05s, the 56.95s for rotations back up. And below that 56.95, I'm going to just stay on the short side and see if they can rotate back down again. Now, in the bigger picture, I would say we fall back in stage 3 in the profile, range-bound trading. But the range is pretty big right now, so it's hard to say. I would not be shy about the short side and see how far they want to take it. But it's a lot of range and see where they actually start settling in. But if they can't take out the resistance now, I think they may be entering that stage 3 of the profile and be in pretty good shape to start building value. And we'll have to find out where they want to start building that value in this bigger range. On the NASDAQ and the bonds, the bond market is a bit to the downside. They're still holding right smack in the middle of this area we talked about. Going back and forth, if I fold this together, so you can see this area right here is what I'm thinking they're going to start building value. And so far, not quite. They're still trading very much up in this upper area, the above the 16s, below the 118s. So starting off range-bound trading in that range again. Not going to be tomorrow after the announcement, we may see a directional move. We'll see, depending on what they do, or especially what Powell says. But at this point, I would start off range bound. Looking to buy weakness all the way down to the 116. Looking to sell strength all the way up to the 118s. And that's pretty much the dynamic. So at this point, we're trading at the 16. So our next buy opportunity at 1614s, 1604s, 116s. Short opportunities against 1620 1703, 1708, 1714s, 1720s, rotations back down. And I think if they start taking out the 1708 and 1712, I would be looking more for a directional move up to the 118s. And below this 116.14, probably looking at the move all the way down to the 116s at that point. So that's the bonds, pretty range bound, not much directional moves going on that guy right now. Nasdaq is the one I'm a little bit hopeful about. They got the big techs, which got so hammered, be able to get a little bit of make a little bit of a go out of it and get back up in some good territory. At this point, anyone's guess. They're up here, reverse retest in this area. They were up quite a bit above this resistance area yesterday, but they couldn't hold it either. They knocked it down right at below this area right now. So below 20,000. If they can get up above 20,000 again, I would be more optimistic about the long side. But Nasdaq has the potential to get up above this area, I think a little bit better than the ES has, and potentially head higher. So a little bit of tech buying probably could get us going in that direction. And that could potentially move the ES with it and drag ES up with it. So initially, looking for early strength to see if they can retest these highs. The 9 looking for and as I did on the ES, looking for short setups against this early strength. So aggressive would be at the 1990, 20,020, 20,060 would probably be pretty good areas potential for shorts. And if they start taking out the 60s, a little bit less aggressive, but still looking for shorts against the 110s here and the 160s for rotations back down again. But I'm thinking that if they can get up above that 20,060s, we may be right back up above this area, trying to extend. So a little bit less aggressive on those shorts, but they are definitely there since we were up there probing yesterday. All right, so let's see if they can take out the 20,000s or if this is going to be a dud, and then we're going to see a nice short setup and a rotation right back down again. And that would be on the Nasdaq, we can head right back down into this somewhere in this lower range. And no doubt they're going to be down in the low 19,000s again, but they could. I mean, depends. They could. I mean, we had the ceasefire in the Middle East just get blown up, so that's done. So now they're shooting at each other down there again. And if there's something happens with the Iranians, that could certainly also set off a little bit of an issue in the markets. I think it will be short term, but it still would be a negative impact initially. All right, so looking to buy weakness on Nasdaq 930s, 890s down to the 850s, and I think below 850s, I'm going to be stay on the short side and see how far they can retrace it. So we cut off the selling at the low 19,000, and we cut off the buying at the 20,000. So we have like 1,000-point range to work with. So we'll see where they're going to settle in. But initially, I'm just looking for failures to take out the 20,000. That would be the trade I'm looking for right now. Could set up a nice short trade for rotation back down again. And if they can take that out and hold above this 20,060s, we may be in a good spot to maybe make a bigger change. So there been 2 days we are retracing to the upside. And if they can keep going, I mean, we may be very well on our way to a little bit of a recovery rally. All right, so that's the Nasdaq. Looking at oil and gold. And gold is blowing up, melting up. Can't say melting down, it's melting up. Look at that thing, way up. And I think that has to do with the Middle East situation. If anything, it's where it's so the ceasefire came to an end yesterday, and now they're back. Now they're shooting at each other, and I think they're dragging Iranians right into it right now. So there's going to be something coming to a head. So gold heading higher, people moving to safety. And yeah, you start getting a shooting war down there. I think it's going to be a short one, but you're going to get definitely a negative reaction in the market if that kicks in. And that is something more than just the Israel shooting at Hamas and back and forth there. But if they actually start bombing the Iranians. So I think gold is reacting to that right now, and oil is going to react. It's reacting to it as well. And that's an uncertainty play. But gold, look at that, 3,030. So they are definitely on the way up here. So someone is very concerned about everything. Now, I happen to think that that may be an overreaction too. But in the short term, that's what people are doing, buying gold and probably sitting on the sidelines. The downside with gold is the only thing you get out of gold is appreciation, right? You don't get any dividends or anything like that. So you see, holding it is just a dead asset unless it goes up in price. So I would trade gold from the long side of the market still, given what's going on. There's no reason not to. So I look to buy weakness at this point against the 29s, the 25s, 20s, 15s for rotations back up again. And I think if they start trading below, you have if they start trading below the 15s here, one more level is 11. But if they trade below these two support areas, I think you're heading right back to that 3,000 attractor. Now, as I keep saying, sometimes when you get these big moves in the overnight, you're going to get the day session reversal right back down into this area. So that could be a nice early short trade in this, just clearing the air, if you wish, on gold. So sometimes you get that, especially when the overnight moves a lot directionally. You get the day session here kicking in and knocking that thing down quite a bit. So I would not be so shy about the short trade if they start heading lower. And but I would be looking at buying the 15, 16s, and maybe down to the 11s at that point for rotations back up again. So trade gold from the long side. Watch that early potential short trade setting up. And then oil. Oh, I forgot to roll oil, didn't I? Okay, I'm just going to do it on this guy since I forgot to roll it, but I'll roll it. So at this point, it's to the upside, and I think that is the MCL, the micros is probably tilted to the upside. It's going to roll that guy. That goes pretty quick. So rolling that guy. The roll to the K expiration, May expiration. All right, so K is trading at 68 still, so pretty much the same 68.30. That's a little bit lower than the April expiration. So that's 68.30 is where the K is trading, and the H or the J is trading at the 50s. So 20 ticks lower. So not much of a difference. So I would still be looking at a slight bias to the upside on oil today, given that the uncertainty in the Middle East is kicking back up again. And as I said, if they start shooting at the Iranians, I think oil spikes a little bit higher, even in the short term at least. So I would be looking at oil from the long side right now, and that's just given that the uncertainty in the Middle East. That's kind of what's driving that. And if they can't, let me see if I can get my this capital flow on oil. So this is still on April, but you can see if they can, I'm probably going to expect it to trade back up in this upper range, given that uncertainty, somewhat of a risk premium coming on oil at this point, at least in the short term. And if everything gets sorted out fairly quick, I think that comes off. But you never expect stuff like that to get sorted out quickly. So, and there's too many unknown in that when that kind of conflict starts breaking back out again. So at this point, looking for higher prices on oil up to the 69, 70, maybe even up to the 72s in the short term at least. So looking to trade it from the long side. Now, this is the structural dynamic is to the downside on oil. It's given the policy changes, but short-term risk premium based on uncertainty in the world, the conflict. Yeah, definitely. That would be a definite move to the upside. So I would look at oil from the long side at this point, at least. Looking to buy weakness, 68.30s, 67 or 68s, down to 68.30s and 68s, pretty much these two. If they for some reason trade below that, I would be back range bound at that point. But I think the oil is going to be priced up a little bit based on what's going on. All right, back to the ES, and we are looking at a market pretty much holding where we left it. So Fed meeting begins. We have news at 8:30, 9:15, and a 20-year auction at 1. And let's see if we get the big reaction today. Sometimes that happens for rollover, not rollover, for Fed day before Fed days. You think it's going to be a range-bound day, and you get a ton of direction, you know, setting it up or something like that for the outcome. But we'll see. At this point, we have a starting point, and we know when to change our minds if things start changing on us. All right, we'll wrap it there, guys. Good trading. And I will see you back at 11:30 for the next update. Later.